The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Ben Boulos. These are your headlines. Apple names hardware chief John Ternus as its next CEO, succeeding Tim Cook in September. Cook, who oversaw a $3.6 trillion increase in Apple's market cap, will become the company's executive chairman. Reporting suggests Iran could now send a delegation to Pakistan for a second round of peace talks. Our colleagues stateside on Squawk Box will be speaking to US President Donald Trump at 1:30 p.m. London time.
The fate of the ceasefire continues to shape investor sentiment, with growing expectations for talks pushing crude prices lower and lifting Asian equities. European futures are pointing higher ahead of today's session. The UK Prime Minister Keir Starmer insists he knew nothing about Peter Mandleson's failure to pass developed vetting in a 2.5-hour parliamentary grilling, as the man, sacked as Foreign Office chief over the scandal, prepares to face lawmakers today.
The big news story today, Tim Cook will stand down as CEO of Apple at the start of September after 15 years leading the iPhone maker. He will be replaced by current head of hardware, John Ternus, while Cook will become chair of Apple's board. Arjun filed this report.
John Ternus will take over the role of Apple's CEO from Tim Cook from September 1st in what is a pivotal time for the Cupertino giant, as questions swirl over its capacity for innovation and its AI strategy for the future. Cook has been instrumental in turning Apple into one of the world's most valuable and profitable companies since he took over the helm from Steve Jobs in 2011. Cook has overseen a nearly quadrupling of revenue and a 20-fold increase to the company's share price, while he's also pushed Apple into new markets like wearables with the watch and AirPods. This has been critical in building Apple's ecosystem of loyal users, which has allowed the company to boost its software and services revenue that it sells to its install base. Cook has also been key in managing Apple's supply chain through multiple shocks over the years, entrenching it in China and diversifying it more recently to India. As CEO, he's also played politicians on so many occasions, meeting with officials in China over the years as Apple looked to unlock growth in that market, and more recently with Indian Prime Minister Narendra Modi and, of course, President Donald Trump at home. While he leaves a $4 trillion company to Ternus in strong shape, Cook also leaves some questions unanswered. Investors want to know what Apple's AI strategy is going to be and how to build Siri on Google's Gemini AI models will play out. And will there be a new product beyond the iPhone in the age of AI that will ignite growth at the tech giant? That will be John Ternus' job to answer. Ternus, who's been at Apple for more than 2 decades, is an engineer who has worked on Apple's most important products like the iPhone and more recently on its chips. But many believe the next few decades could be defined by what comes beyond the hardware and whether Apple can build a solid AI platform and ecosystem as rivals like Samsung push ahead. Ternus has big shoes to fill, and there will be big expectations to come up with answers to some of the market's biggest questions. Arjun Karpal, CNBC, Singapore.
Arjun, just highlighting a few talking points there for us. And the reality is this is a managed transition. So as you talk about succession plans, this is one no doubt Apple has had in the works for a while. And given the handover won't be till September, it suggests that there's going to be some sort of learning curve here and everything's going to be in an orderly fashion. But that it comes at a time when markets are not orderly. Everything that's been going on, supply chains, you think about China's biggest issue in recent years has been around the Chinese market. Now it's got a very big geopolitical backdrop that it's navigating. So there's that story. In addition to what was mentioned in Arjun's story there, conquering AI. There's been no hit for Apple when it comes to software or hardware in AI. Siri has been a flop to this point, even despite attempts to integrate it with other existing AI technology in the marketplace. It has done nothing significant to date. So Ternus needs to come up with some sort of AI win that is going to be part of his legacy.
Yeah, I mean, the endorsement from Cook suggests that he thinks he is very much up to the job. He describes Ternus as having the mind of an engineer, the soul of an innovator, and the heart to lead with integrity and with honour. And the point that you make about the stability and the transition is worth remembering. He will be only the third CEO of Apple in the past 30 years. So a company, in contrast to some where we see perhaps more frequent shifts, there is this kind of continuity and stability. And the fact that he has spent half his life at Apple, he is steeped in, the culture and the challenges the company faces. The pressure, as you said, in terms of the situation with China, where a lot of the manufacturing is done, the pressure from President Trump to onshore manufacturing in the US. How does he navigate that? The missteps, I suppose, around Apple Intelligence and the limitations and how it sort of falters compared with some of the rivals. Apple, unique really in the tech space world of not being one like Amazon and others that have really spent big on hyperscaling AI data centers, instead choosing almost like an AI data center light approach, licensing and having agreements to use facilities that others have spent to set up. Now, who knows? Maybe that may prove to be the right strategy if returns are not forthcoming on those investments.
Maybe, but if you think about the rivals, they've all inked major contracts in the space. They're already seeing the rewards from that AI investment. So when you think about what's the most relevant skill set from here, Steve Jobs came up with incredible technology. Tim Cook, amazing at supply chain. Ternus is seen as a significant player when it comes to hardware. What skill set is going to be relevant for the future? You could say hardware, of course, because of AI, but I would argue supply chain is still important at this stage, given all the issues we're seeing around the geopolitics. This story, I must say, does take me back because I was on air at the time when Steve Jobs passed away. The news flow was just crossing the tape at the time, and Tim Cook had only just taken over in the months prior to that. So it'd been quite different circumstances this time round in terms of what's happening in the backdrop. But to your point, it is a long-term role. So there are hopes, no doubt, that he will be there for many, many years to come.
But I suppose the other thing investors and customers will be looking to is what is the next big innovation? Because arguably the last big bang moment for Apple was the iPhone. Nothing has come close to the impact that has had on our daily lives and our way of living, the smartphone. I remember when a friend years ago first got the earliest model of the iPhone, and I said, what's so special about it? And he showed me, he said, look, you can see the internet on your phone like it looks on a computer desktop. And at the time, my mind was blown. But that was the significance of the shift. We hadn't had that before. What is the big innovation that is on that scale? And it's not clear what that will be.
Well, if you think about it logically, Siri was one of the first agents that we all got introduced to, Hey Siri. But it has not been useful technology. Most of us make jokes about Siri and the sort of answers that it comes up with versus the real life innovations you're seeing from agents that are proliferating. Claude, for instance, the significant advances from Claude. Given the runway that Siri had for many years, you think it would have been way more developed and had a much stronger edge in this moment. And it simply doesn't. So what does it tell you about some of the back office features at Apple that need to be fixed so it is more of an innovative company in this wave?
And I suppose the other thing that they'll be hoping he will do, those on the inside, is maintaining that culture of innovation and experimentation and creativity. Because remember, for all the successes, there have been some flops under Tim Cook. Vision Pro, the big augmented reality, virtual reality headsets, they just really didn't take off. And I suppose supporters would say you need to free up your engineers, your hardware gurus, to experiment with stuff that may not work in order to land on the idea that is the big bang moment.
Yeah, it's a great point, because it's not that the category is unsuccessful. Meta, and what Mark Zuckerberg has done in the space with a much cheaper device, of course, is an example that it can work if you get the product right in that category.
Indeed. And no doubt we'll be talking about this more throughout the show, and still to come on the programme as well, as the drama around Starmer's appointment of Peter Mandleson as UK ambassador to the US continues. We will look ahead to a crucial day for the Prime Minister. Plus, reports suggest Iran is to send a delegation for peace talks with the US and Pakistan, despite comments to the contrary. We'll break down exactly what's going on. We'll have the latest from Dan in Abu Dhabi. And we'll chat economic resilience and security with JP Morgan's Chuka Umunna. That's at 7:30 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's the CEO of the London Stock Exchange Group, Julia Hoggett.
There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. which also means that if the context changes or the information changes, it is absolutely fine to also change your mind.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Hello, welcome back. The US President Donald Trump said it's highly unlikely he will extend a ceasefire with Iran if a deal is not reached before its expiry on Wednesday evening Washington time, adding that he is, quote, not going to be rushed into a bad deal. Meanwhile, uncertainty surrounds a potential second round of peace talks, with Iran now reportedly planning to send a team to Islamabad, despite public suggestions to the contrary. Dan joins us with more now. Dan, just demystify all of this for us, because I thought the Iranian regime said they weren't going to send a delegation, and now it seems they are.
That's right, Ben. And as all of this takes place, the clock is certainly winding down towards Wednesday's deadline as this 2-week ceasefire nears its end. Peace talks are reportedly back on, though, but of course the diplomatic path here remains very unclear. The Vice President J.D. Vance, Steve Witkoff and Jared Kushner are confirmed to travel to Islamabad today, even as Tehran's top negotiator, this is Mohammad Ghalibaf, warns that Iran will not negotiate under what he called the shadow of threats. And while Iran has signaled that mediators will actually show up, we still don't know exactly who, and state media is already framing Washington's so-called excessive demands as a deal breaker. President Trump is doubling down, though. He said on Truth Social overnight that he is under no pressure to rush a deal and is unwilling to extend that ceasefire window. The president also warned that a failure to reach a deal will trigger strikes on Iran's power plants and bridges. So the pressure is indeed on. He also said this agreement that is in the works will be far better than the 2015 JCPOA under President Obama. Of course, important to point out, nobody knows exactly what it looks like yet. And against the backdrop of this as well, we're also seeing oil prices react here, spiking nearly 7% on Monday after we saw US forces seizing an Iranian flag container tanker ship in the Gulf of Oman. That's the first time we've seen a use of force in the current Hormuz blockade. We are seeing prices cool off today, perhaps on the diplomatic headlines here, but of course the Strait of Hormuz remains functionally closed. And at the same time as well, the concern is also growing in the backdrop here as we reach what could be a critical 24 to 48 hours on the potential diplomatic off-ramp. Reuters also reporting today that there is really some growing anxiety among the Gulf leaders about the trajectory of these talks. The leaders here in the Gulf fear that the tight deadline, that is the Wednesday deadline, is perhaps forcing a pivot away from drones and proxies, which are the issues that they've put on the agenda as being critical in the negotiations, towards issues like uranium enrichment, for example, which would effectively reward Tehran's leverage rather than dismantle it. So look, still a lot of uncertainty coming into these peace talks, but the positive is that the US team is now confirmed to be heading to Islamabad. Who shows up on the other side on behalf of the Iranians remains to be seen, and exactly what this agreement that the president seems to be talking about on social media, what that looks like, of course, is a big question mark as well.
OK, Dan, thank you very much for bringing us up to date on all of that. And on a programming note, President Donald Trump will be speaking to our US colleagues today, so don't miss that conversation. It's happening at 1:30 London time.
Washington will reportedly host a second round of talks between Israel and Lebanon at an ambassador level on Thursday as a fragile ceasefire remains in place. Tanya asked Paula Yacobin, a member of Lebanon's parliament, how optimistic she is ahead of the talks.
I cannot say that I'm really optimistic. And the reason is that we have to see what will happen in Islamabad. Unfortunately, till today, Lebanon is not the only decision maker when it comes to its own fate, which is not very logical. However, till now, Iran is still having its say through Hezbollah. The Lebanese state, through the president, through the prime minister, are trying hard to say that we decide for ourselves and we know our own interest. But we know very well for too long, Lebanon was a card in the Iranian talks. So now, once again, and now more than ever, in these difficult negotiations between Iran and the US in Islamabad, they still need this card. That's why Hezbollah is against the peace talks.
Let's get to Caitlin Birch, Chief Economist, EIU. Caitlin, thank you so much for joining us. I've got to say I was buried in macroeconomic forecasts all last week in Washington. And the reality is the IMF had come up with multiple scenarios about this situation. If we get through this benign situation for the next couple of weeks, then growth is still retreating. If we have worst case scenarios that go on, then we have more calamitous growth stories. The worst case scenario, we get to like 2% growth, which is comparable to the financial crisis and the pandemic. So what do you make of the multiple scenarios confronting the world economy?
I have to say I agree. And I also think that scenarios are the only way to tackle something like this, where there are so many variables at play at any stage that seem to be constantly changing. So a nimble way to approach it with the best case and worst case, and hopefully that middle line that we stay on is really the only way to make sense of this changeable world. The worst case scenario, I'd say, is still on the table. Really, both are as we head into potentially the last day or two of talks before the current ceasefire expires on Wednesday. I could easily see us getting to that worst case scenario where we have a wider conflict, potentially even the GCC wrapped into a more offensive role and oil prices heading back well above $100 a barrel. But the alternative is also true. Markets are clearly pricing in a sort of wait and see. Let's hope that we head on the better trajectory, not the worst one. Still hovering below $100 per barrel with the level of risk we have is pure optimism, I think.
And you can see it on the stock market too, Caitlin. The record highs we've had on the S&P 500 last week. Extraordinary when you think that one of the scenarios could be some sort of financial crisis, pandemic-esque retreat in growth. The other points to raise from here, it was mentioned in the FT yesterday, was a description called the fog of peace. We've been talking about the fog of war for a long time, but the fog of peace is also just as complicated, that if we sort of muddle through, we don't get a fully open Strait of Hormuz, that there's still supply chain disruptions, even if there's some sort of negotiation in coming weeks. What does that do to the uncertainty and therefore economic growth from here?
Well, flat out, the uncertainty remains to a certain extent. Our baseline scenario, which implies that we start to have prices dropping off and an end to hostilities within the next couple of weeks, probably maps out quite well to that. And that also implies that Iran retains the capability of, in future, shutting the Strait of Hormuz or potentially striking Gulf assets as well for US allies, NATO allies in the region, which means the threat still hangs over the region. That would be hugely important for Gulf economies, but for the global economy as well, with commodity prices staying high and that risk premium staying on them. Under any of the scenarios, we don't have oil prices falling back to where they were pre-war until closer to 2030, really. So we're going to be parsing through the impacts of that, even if we go on to a better case scenario for several years, just given the disruption we've seen in the last month and a half.
Caitlin, I'm intrigued by the second round, I suppose, the knock-on effects of what you see happening to the economies in the Middle East, because if some of those Gulf states are seeing less money coming from tourism, they're also seeing less money coming in from sales of oil because they simply can't get the oil out to the rest of the world while the Strait of Hormuz remains shut. What are the potential domino effects of that, given these are states that invest heavily in sports teams and clubs around the world, in infrastructure projects? They have had big investments into AI and tech companies. Does the rest of the world catch a chill if those economies sneeze?
Yes, we do. And the degree of that will depend on, again, how long this conflict goes on and when the effects start to compound. So you've already seen the economic impact on the Middle East. We've seen it clearly in the oil sector, with Qatar, for example, taking offline some of its major gas fields, with damage to major production refining sites. That will depress activity in that critical sector. Remembering, of course, that's where a lot of the revenue, the vast majority of the revenue, comes from to then fuel those investments. We've also seen non-oil indicators, so kind of the PMIs for the non-oil sector of GCC economies, all dipping into negative territory already by the end of March. So 1 month in, and the economies are all depressed. We now have recessions varying from mild to severe, all year-on-year contractions for most economies in the Gulf. That will weigh on investment moving forward, again, depending on how long this goes on and how severe it becomes. And it will reorient a lot of that investment into reconstruction and rehabilitation at home. Other partners are poised to join in that effort, like China, but it will depress funds available for that. I would say that there are some core priorities like AI, where as much as possible, we'll still see investment flowing into those areas because it's just so critical to get ahead in those industries.
And then in terms of the way equity markets are behaving, I mean, just in the last session, the South Korean Kospi touched a new record high, despite the precariousness and uncertainty around the talks and the looming deadline of the ceasefire, which President Trump says he will not extend if there is no deal. And yet we see the equity markets touching these record highs in Asia, on Wall Street. Do you think that is based on an over-optimism, or is it based on fundamentals that we're seeing in the numbers in earnings season that shows actually a lot of these companies, particularly tech companies, are posting decent figures and revenues and profits?
Yeah, I think it's probably a little bit of both. Exactly. We've seen that immediate resilience, at least in the corporate sector, that suggests that life will continue as normal. We have to remember we are still in the very early days of this. So, if it does get into a worst case scenario and we head into more months of this, that picture could start to change. The fact that a lot of tech companies are based in the United States, of course, is in and of itself a bit of a benefit because the US economy by its nature is somewhat insulated from global shocks compared to Europe or Asia, for example. So just the kind of continued dynamism of the US market, which is largely resilient to most shocks, will continue to fuel that industry. Plus the level of kind of capital driving into it already over recent years means it has momentum to run on its own. But I do think there's an element of optimism, and that optimism is also rooted in something real, in that all parties, the US, Iran, and arguably Israel as well, have more to benefit from a de-escalation than from a renewed escalation. So that optimism that talks the next couple of days could perhaps lead to something, even an extension of the ceasefire and a partial reopening of the strait. There's a lot hanging on that hope because it benefits everyone.
Let's see if it's a rational heads all round. Cailin, thank you very much for joining us. Cailin Birch, Chief Economist, EIU. A Fed Chair nominee, Kevin Warsh, is set to tell senators at his confirmation hearing today that he is committed to central bank independence with limits. In prepared remarks released on Monday, Warsh is expected to pledge to work with the Trump administration and Congress on non-monetary Fed matters while criticising Fed overreach. Steve Leisman filed this report.
Fed Chair nominee Kevin Warsh will strike a note of optimism about the outlook for the U.S. economy in his Senate hearing, while at the same time criticizing the very Federal Reserve he hopes to join. Warsh says this is a time of great consequence for the U.S. economy and the most significant hinge point in a couple of generations. Economic growth potential, he says, is rising. That optimism stems from his belief in the promise of artificial intelligence and technology, born of a strong background that Warsh has in tech investment and long-time relationships with leading tech investors, including Peter Thiel, Mark Andreessen, and Jerry Yang, founder of Yahoo, along with Alex Karp from Palantir. These are people he either went to Stanford with or invested with over the years. Warsh's testimony also struck familiar themes of criticism of the central bank since he left as a Fed governor in 2011, including that it strayed into fiscal and social policies. Warsh will say Fed independence is essential, but that it's best achieved by achieving its dual mandates of stable prices and low unemployment. He adds that Fed independence is not threatened when elected officials state their views on rates, a reference to the president's consistent and often harsh criticism of the Fed and Fed Chair Jay Powell. He went on to say, "I'm committed to ensuring that the conduct of monetary policy remains strictly independent. I'm equally committed to working with the administration and Congress on non-monetary matters that are part of the Fed's remit." This could bring Warsh in conflict with some of his colleagues on the Fed, since some of these decisions and changes at the Fed will require either the approval of the Federal Reserve Board or the Federal Open Market Committee. Steve Leisman, CNBC Business News.
Meanwhile, I asked key ECB Governing Council members at the IMF World Bank spring meetings last week about the importance of central bank independence.
independence is an absolute prerequisite for the efficiency of monetary policy. It has not been decided by governors or central bankers. It has been decided by democracy, Congress here in the US or the European Treaty in the euro area. And it's not for us, governors. It's for the well-being of our fellow citizens and our economies, because experience shows that independent central banks deliver lower inflation and lower interest rates. So it's an absolute prerequisite for the efficiency of monetary policy, especially in the troubled times. We will deliver on price stability.
Central bank independence is extremely important because in the end it makes it the work of the central bank more effective. So if there are attacks on central bank independence and if you would have to raise interest rates to bring inflation down, you will have to do more, much more than you otherwise would have to do. So in the end, it's very costly, also for an economy. So it is important that central banks can do their job in an independent manner, because in the end, it's the best thing for society.
I also asked IMF Chief Economist Pierre-Olivier Gourinchas about the likelihood of Fed rate reductions this year.
The situation is complicated for the Fed precisely for the reasons you mentioned. On the one hand, you have inflation that has not been coming down sufficiently. The metric that the Federal Reserve follows, what they call PCE, core inflation, is not back to 2%. And it's not been back for a while, and it's not been coming down very significantly. And that's a problem for them. That's their mandate. But the second side of the ledger is the labor market has shown sign of weakening. There is a lot less job creation, even though the unemployment rate has not been rising. So there is a delicate balance right now in the labor market, and they're trying to assess which way it might break. But it might not stay in this current equilibrium. So given that, there's very little that they should be doing right now to ease aggressively, and the markets were pricing some moderate reduction in rates. Now the war happens, and it's very natural that now the Fed is going to be waiting and seeing what it needs to do. And in my view, these rate cuts are, for the time being, off the table.
Let's have a look at what's happening on the markets, and all of the three major US averages closed the session lower. The Dow just below the flat line, but the S&P and the Nasdaq giving up a little more ground, around about 0.25% lower. This around the concerns about the status of those peace talks. It's looking like things are a little more optimistic around the status of those. The US delegation, we are understanding, will be led by the Vice President J.D. Vance. There are now reports that Iran will send a delegation. So we'll see what happens on the US markets once the trading session gets underway for today. But that was the picture on those markets yesterday. Investors in the US will be keeping an eye out for that nomination hearing, the Senate nomination, the confirmation hearing at the Senate Banking Committee, when Kevin Warsh, the Fed Reserve nominee to replace Jerome Powell, will appear before lawmakers. There's also some March retail sales data out for the US, so plenty to chew over, and a slew of corporate earnings as well. Picture on the Asian markets in the session. This is how they were looking. Worth mentioning the Kospi during the session touched a new record high, and it's basically recovered the losses that it had seen since the start of the Iran war. Year to date, the South Korean market is up more than 50%. A lot of that momentum being driven by some of the tech and chip makers, SK Hynix and Samsung Technologies, both up in the session off the back of some strong exports figures. So a mixed picture elsewhere, though, some red there on the Shanghai Composite, but the Japanese and the Hang Seng Index both trading higher as well.